Hello, my name is Matt Neal, and today we'll be conducting a strategic analysis of PNC Financial Services. Today, we'll cover the industry that PNC sits in, the commercial banking industry, what PNC's competitive advantages are within those industries that have led to their financial performance or financial success over the past 5 years. Then we'll touch on PNC's SWOT analysis, their strengths, weaknesses, opportunities, and threats that the bank faces. Finally, looking at their strategic issue and recommendation before following it up with a conclusion. First, let's take a look at the industry PNC competes in. PNC competes in the commercial banking industry, and this industry rewards scale and operational efficiency to withstand regulatory compliance and competition pressures. Let's first look at these competition pressures. PNC is a super regional Category 3 bank, similar to Truist Bank, but smaller than global systematically important banks such as JP Morgan. These GSIBs have an advantage in operational scale and with enhanced efficiencies, global reach that can withstand increase in technology investment, regulatory compliance, and changes in the economy. Operational scale is important because without scale, investments in technology or staying within regulatory compliance, it leads to enhanced or increased consolidation across the industry. Banks can improve their operational efficiency and scale with effective technology investments. Through automation, the bank will improve operational efficiency even though startup costs are high. Additionally, technology investments increase the digital capabilities and banks' ability to invest in the customer experience. Lastly, banks need to ensure that they have a bona fide security system, which ties into complying with consumer information safety regulations. Regulatory pressures, which have increased post the global financial crisis, require banks to hold more capital and have enhanced liquidity. These regulations are in flux with Basel III Endgame, which is still going through litigation and can impact the capital the bank must hold aside. To withstand these industrial pressures, PNC needs to have a strong competitive advantages, which we'll look at next. Now let's touch on those competitive advantages that PNC enjoys. PNC is known for its lending principles and conservative risk management, which has led the company to have a strong balance sheet regardless of external economic conditions. PNC lends conservatively with strong underwriting principles, which have led to good ratings by different rating agencies. These two advantages have allowed PNC to be a natural, successful acquirer during economic downturns, which has spurred growth over the last 25 years. Additionally, the company looks to combine its underwriting and lending with its treasury management solutions to deepen the relationship with middle market commercial clients. PNC focuses on enhancing and differentiating relationships with an emphasis on the client experience, overall deepening the relationship that they have. These competitive advantages have led to financial success for PNC over the last 5 years. Now we'll see how those competitive advantages have led to strong financial performance for PNC over the past 5 years. Looking at the chart on the left, PNC has increased its net income over the past 3 years, as well as lowering its efficiency ratio. The efficiency ratio measures how many cents it takes for the bank to generate $1 of income, so the lower ratio means the bank is becoming more profitable, more efficient, and has more scale, while also increasing its overall net income. Looking at the chart on the right, we're looking at total assets and NIM, or net interest margin. Over the past 5 years, PNC has increased its total assets as well as improved its NIM. NIM measures the interest rate received on assets minus the interest rate paid on its liabilities, with PNC's NIM increasing from around 2.2% to 2.8% over the last 5 years. This signals wise investments in assets through the bank's lending and investment risk management. Looking at the table below, table 3, for the balance sheet metrics, here we're looking at PNC's metrics versus super regional competitor Truist and GSIB competitor JP Morgan Chase. CET1, or Common Equity Tier 1 ratio, highlights that PNC is well positioned from a capital standpoint. net charge-offs and allowance for credit losses as a percentage of loans, you can see that PNC has lower net charge-offs and a lower allowance for credit losses, which is lower than both of its competitors, signifying that PNC is expecting lower losses related to client credit deterioration through its strong lending principles. Now, let's look at PNC SWOT analysis before getting into the strategic issue and the following recommendations. PNC's competitive advantages have also led to several strengths for the bank, with strong relationships with commercial clients, as well as a conservative balance sheet with their risk management and lending principles. Through its strong balance sheet and executive leadership, PNC has shown to be a successful acquirer. These strengths have led to the opportunity for PNC to grow domestically. There are two strategies PNC can pursue with organic or inorganic growth. Organic growth, PNC wants to deepen its existing relationships with clients and grow naturally. Additionally, PNC can grow inorganically through acquisitions because of its strong balance sheet and being able to withstand changes in the overall economy. PNC's weaknesses are structural in nature. The weaknesses of super-regional Category 3 banks is not having the global size, scale, and diversities that GSIBs enjoy. Additionally, because of that, they are not able to invest in technology as much and must allocate capital more wisely to ensure greater efficiency and effectiveness. GSIBs poses a threat, being able to provide the same product and services as their smaller bank peers and be more efficient. Fintechs have also taken market share from traditional commercial banks, increasing the threat of bank substitutes. Additionally, fintechs are more efficient, not needing to invest in the traditional brick-and-mortar locations of commercial banks. Lastly, chasing scale, digital capabilities, and changing regulations increase the costs that banks face. Through this SWOT analysis, we can pinpoint more of PNC's strategic issue. The overall issue PNC, as well as other super-regional Category 3 banks face, is GSIB competition, regulatory compliance, and the increasing investment costs. GSIBs are positioned better for long-term success due to their scale and breadth. Regulatory compliance continues to evolve and increase costs that banks face, putting pressure on efficiency. Additionally, the cost to compete is heightened with increasing investment costs in technology to provide digital solutions. Super-regional Category 3 banks must weigh their capital allocation to ensure that they improve their strategic position within the industry going forward. Should these banks focus on the global size of GSIBs or focus on penetrating the depth of their existing markets and clients? Thus, the strategic issue PNC faces is how can they strengthen this position, achieve scale, and maintain the same principles that have underpinned their success. Now we'll talk about what I believe PNC should be recommended to continue their success in the industry going forward. Going forward, I believe that PNC should focus on 1. Continue to be client-obsessed with a differentiated experience, continuing to deepen its relationship with its middle market commercial client base, instead of competing head-to-head with GSIBs on more larger global clients. 2. The bank should continue to allocate capital effectively with targeted growth strategy. Whether through inorganic or organic growth, PNC should focus on penetrating the markets that are growing and provide long-term value. 3. Continue to be a disciplined lender. Maintaining their conservative nature will help the bank in any economic downturns in the larger economy. Chasing undisciplined growth could potentially hurt the bank, hurt its depositors, and sully the reputation that PNC has built over the 165-year history. Through this recommendation, I believe PNC would be set up for success through its industry long-term in face of the strategic issue that it faces. In conclusion, the United States banking industry is increasingly shaped by regulation and technology investment, which favors institutions with scale and efficiency. PNC sits in a unique position between smaller regional banks and global systemically important banks, which creates competitive pressure but also opportunity. They feel the pressure to compete with G-SIBs, but also enjoy the advantage of offering top-of-class services to their clients. The bank should continue to leverage its strength in conservative underwriting and their middle market relationships. This has driven PNC's success in the past and will continue to do so. Additionally, pursuing a disciplined growth strategy and allocating capital effectively and efficiently, PNC can strengthen its operational efficiency and remain a leading super-regional institution. Thank you for listening to my presentation on PNC Financial Services.